Happy Finance Tip Friday! Let's talk about the consideration of a 50-year mortgage plan. They're currently in the proposal process of thinking about and stating 50-year mortgage options for individuals and businesses. Let's talk about what this means. So, before you think, oh my gosh, that's horrible, that's so bad, some things you may want to consider is this your forever home or is this a flip home or a way that you're trying to build your wealth? A 50-year mortgage plan, most of us know that our minimum payment each month is going to be lower, allowing us more cash flow liquidity when it comes to our month-to-month budget. Now, if you are very financially disciplined and have a really good understanding of your finances, you might think, wow, a 50-year mortgage is going to be way less of a payment, but way more interest. And that is correct. I actually ran a quick little analysis and calculation on a $300,000 loan for a mortgage on a 50-year versus a 30-year. And for a 50-year mortgage, you're paying roughly $330,000 more in interest at that principal balance or that loan balance rate of borrowing, which that's a lot. That's a lot. That's basically double your home value that you just purchased back into the bank's pocket. However, if it's not your forever home, or if you get a 50-year and pay it like it's a 30-year, there's also some considerations about, God forbid, anything happened with your health or your financial position. Having a lower balance due each month isn't necessarily a bad thing. However, at the end of the day, would I recommend it to most people? No, because a lot of us are very comfortable with making that minimum payment, and then that is $300,000 more out of your pocket and into the banks when you select the 50-year. But the difference between the monthly payment of a 30-year versus a 50-year, if you think you can utilize that with your entrepreneurial skills, with your investment skills, anything where a larger cash position is going to help you, that's another consideration. What if you want to start up a business and you need to save more money? What if you're going to flip this home and you're not really thinking about having it for 50 years? There's a couple things you really want to think about before you just write off a 50-year mortgage plan as awful. So that's all I have on my considerations on a 50-year versus a 30-year or 20-year mortgage. I think that for me personally, I would feel most comfortable still recommending most people to stay at the 30-year. I'm not a financial advisor and this is all for entertainment purposes, but I think everybody seems to write it off as horrible and it's really not the full picture. There are things you can do with that extra cash flow that you would save, and also you might need a lower monthly payment if something bad were to happen to you. Thanks for watching.